Hey guys, this is Pratik from Remax 2000, and guess what? We are in the second wave of the market, the fall market. Now, this year couldn't have been the most weirdest year in the real estate market since I've been licensed. The beginning of the year, the consumer sentiment was quite positive with improving economy and upcoming rate cuts that were signaled. Now, the first wave of the market was in spring. We had a fairly balanced and a healthy market, very reminiscent to 2023. However, something happened between mid-spring to where we are today. And let's talk about that. We had an incredible amount of laws, bylaws, and changes to real estate that surfaced in such a short neck of time. Now, that made a lot of investors go on the sidelines, especially around the tenancy laws. We had capital gains laws, we had new taxation rules, we had anti-flipping taxes. So what has this done to the market overall? Well, what I've learned in having numerous conversations with my colleagues, potential investors, buyers and sellers alike, it is causing a lot of confusion. And most of the confusion surrounds on what the future of real estate looks like for people who are holding on to their properties or investments. Given the high cost of borrowing and these new rules has caused a great amount of disdain and discomfort to a lot of investors and buyers. Now, I keep harping on investors, which may not constitute the majority of the market, but they form a healthy proportion, especially when you're looking at inventory levels. Now, inventory levels have been steadily increasing month over month, and that's also because a lot of investor offloading because of mortgages maturing, lack of adequate rate increases to offset the high cost of borrowing, the new laws in place, the new capital gains. It's causing a lot of confusion based on these parameters alone. However, it's not all doom and gloom at the grassroots level. First-time buyers, you take a note. Now, the amount of inventory levels we're seeing is historic. Now, this may be the last hurrah as the trajectory of rate cuts continues. So find yourself opportunities. There's tremendous possibilities to be sourced and negotiated. Conversations that we are having every single day with our colleagues and industry leaders alike are all signaling a very positive outcome. Now, if the rates continue to decline, if there's one political change, even at a federal or provincial level, this can quickly pivot the market in favor of the sellers. Now, what about if you are a seller and you're looking to upsize or downsize? I've mentioned in my previous newsletters in the past that things are always relative in real estate. Many neighborhoods of Lower Mainland, when it comes to detached homes, you are in a single-digit sales ratio. So this automatically means that if you're upsizing from, say, a strata property to a detached home, this is an incredible opportunity for you to score homes with values that have plummeted in the last 2 years and have yourself a great purchase. If you're downsizing, and depending on the neighborhood that you're migrating to, same conversation goes there as well. Now, here's a quick take on what I personally think are one of the most incredible purchases when it comes to value proposition. Number one is strata properties such as condos in major urban centers. And the reason for that is investors are still offloading a lot of inventory when their mortgages are coming up for renewal or at the time of when their tenancies are maturing. So this presents a great opportunity because there's an over-excessive supply. Number two is new construction. That's correct. There's an abundant amount of new homes available to purchase. East Vancouver, for example, has an abundant amount of new duplexes constructed, and we've already seen multiple price adjustments in some of those. They're excellent buy and alternative over townhomes. And in the rest of the greater Vancouver region, there's a lot of spec homes that have just come up for completion, brand new build, and are also stuck and sitting on the market. Again, a great opportunity for you to negotiate favorable terms and get into a new housing market. Another important component I want to discuss is mortgage renewals and mortgage rates. Don't overlook this critical component in your decision making. Fixed rates are a hot button issue. I've been hearing rumblings at the time of this video that insured mortgages can be negotiated around 4% or less, and conventional mortgages on a short-term variable basis are being offered at 4.5% or less. So there's a lot of incentives out there to help you make that informed decision. It's not all doom and gloom, like I said before. There's opportunities that remain and exist. We are in the second busiest market of the year, and I feel like it's going to be another healthy and a balanced trade. Feel free to reach out to me as a resource, and I will love to help you make a move or answer any real estate related questions. My name is Pratik, and I look forward to seeing you soon.